I want to take this time and welcome you to this channel this morning. My name is Adolf Sure, and I want to make a short presentation on what a bank reconciliation statement is. A bank reconciliation statement is a statement that is prepared normally to reconcile the balances as shown by the cash book of your business and those balances as shown by the bank statement. As you know, a trader will have to be maintaining a book called a cash book, which records the money that was received and the money that was given out, either through immediate exchange of cash or through the bank account. That is what a cash book is. But at the end of the month, the bank normally sends a document we call a bank statement to the trader to show exactly the transaction the trader has had during a particular month, and the balances that he has at the end of the month. So sometimes you find that the balance that is shown by the bank statement is different with the balance as shown by your cash book. So that is when we need to prepare a bank reconciliation statement so that we find the problems and correct them. You can reconcile the balances. Away from that for a moment, let's first of all see what brings this difference. Sometimes you may find that you expect to have 5,000 in your bank account. You expect. That means your cash book is showing 5,000. But when you request for a bank statement, you find that you are having 3,000 or even more. You might be having even 7,000. So the question will be, what has caused this difference? Because you have been recording everything that comes in and goes out. So why the difference? So that brings me to the factors that contributes to the difference in the balances as shown by your cash book and those ones as shown by the bank statement. And the number one factor is what we call the book errors. Probably there's something that you are supposed to debit. That means probably there was money coming in, but instead of you debiting it, because when you are receiving money, you need to show that entry on the debit side of your cash book, you might have credited it. Or probably your calculations are not right. You were supposed to add 500. You showed that you were adding 500, but you made a mistake and maybe overstated it to be 700. Such mistakes, such errors will actually make the difference to exist. Yes. Another factor that can cause the difference is what we call bank charges. Many times we transact, and think about M-Pesa. Sometimes you tell someone, I'm sending you 200 shillings. At the back of your mind, you have 200 shillings in your M-Pesa. But you see, for you to transact and send someone 200 shillings, you need to add something small because there are charges that you're going to be actually charged. So if you don't take note of the charges when you withdraw money from your bank, when you send money to someone else and such, then you may think that I remitted 200 shillings, but in reality you remitted probably 207 shillings or even 215 shillings. So those particular bank charges causes the difference, because what you expect that is in your bank is different with what is exactly at your bank because of the charges that you didn't take note of. So that is the second factor. The third factor, we talk about standing order. You might have placed an instruction to your bank to be sending or remitting a certain amount of money to a given account. But sometimes you forget that this is what has been happening, or rather this is what you had instructed your bank. So when preparing the books, you forget, because the bank will not actually the bank will not be able to inform you every time that I am, you are, or rather the bank has transferred some amount of money to someone else. So this may cause this particular difference, because you may not actually be aware that the bank has already remitted the said amount. So they call it a standing order. So when you place an instruction to the bank to be sending money to a given person at a particular, maybe let's say at the end month, then sometimes we forget and never record it in our cash book. That brings the difference. Remember, the bank will have noted it well in its books. So the bank statement balance will be different from that of the cash book. Another factor that may cause this difference is what we call direct deposits, or what we call direct credits. Oh, yeah. So this is what happens. Sometimes there's someone who has to pay you your money, and they don't inform you that they are already putting it in your M-Pesa account or even in your bank account, and they just send it to the bank or take a check to the bank, and it goes through. And because you are not aware that money had already been put in your account, when the balances at the end of the period are brought by the bank, or the bank statement is brought to you, you realize, I thought I had only 5,000, but how comes I have 9,000? Yeah. So that particular circumstance where a person puts money directly without actually being able to inform you to make the entries in your book, we call it direct deposits. So that will also bring the difference in the balance as shown by your cash book with those ones as shown by the bank statement. Another factor that can cause this difference is, of course, what we call the unpresented checks. So the unpresented check as a factor is where you have noted in your cash book that you are going to pay someone. You have written a check to this particular person. Remember, you've noted in your cash book that you're paying this person, but you fail or forget to present it to the bank for payment. So that means the balance as shown by your cash book will be less, whereas the money actually left your bank account. Therefore, this one is going to bring what we call the difference between the balances. That is what we call unpresented checks. Then when we talk about, there are more factors, but let me talk about one more, which we call the uncredited checks. When you talk about uncredited check as a factor, is where you receive a check. Yeah, you receive a check from probably your debtor is paying you, and then you note in your cash book that money is coming in. Yeah, but when you take it to the bank fails to record it, or rather credit it. Yeah, so in the bank there is no money, but in your books you have noted money has come in. So this will actually bring the difference at the end of the period when you're comparing the balance as shown by your cash book with that balance which is actually in the bank. So these are some of the factors that are going to cause the difference between the balance as per the cash book and the balance as shown by your bank statement. Therefore, for us to understand more about this, I'd like you to stay tuned and listen to the next presentation I'll be making on how to prepare bank reconciliation statement and what entries we're supposed to make there to be able to reconcile these balances.